there, traders and friends. Thanks for joining me as at this Monday afternoon market recap. We do have about 20 minutes left in today's session. However, really what we can do is sort of unwrap that of the FANG stocks. We are seeing, again, collective downside and the continuation of breaking some critical support areas that are very important. First of all, I just wanted to show you Netflix. Netflix is something that we spoke about over the weekend. It was of interest. It is down close to $20 as at this recording. You can see the entry here at 350.60, tossing up really between the risk and reward on this, really a one-to-one risk reward. So I understand if a few people, again, didn't take this side of the trade. The good news is that we are back down to support at 333. We're very close to this. It's going to be interesting whether or not we can actually tag this during today's session. It'd be good to see a in and out type of trade within one session. That would be fantastic. But at the moment, it's a long day Morobozu candlestick. You can see the critical support breaking. But at the same time, these FANG stocks, and I'm going to drill into this with Facebook, they are coming back down into pretty critical support areas. And what you're soon going to see is a collective bid for these FANG stocks. So at the moment, again, the sentiment is quite bearish. We are seeing critical breaks to the downside. However, at the same time, a lot of these individual stocks are coming back down into their respective support areas. And I do expect this support area on Netflix at 333 to hold. But as it stands, it's looking quite profitable, and I am very happy about that individual trade. If I continue with this as well, we do have Google breaking down and closing below the gap. So this is interesting, 1,241. This is the fade reversal of the open window. A lot has to be said at the moment about this gap, whether or not it is that of a reversal gap or an exhaustion gap to the downside. It's going to, or at least the answer to that will be found at 1,200, that psychological round number here. At the moment, the chances of this coming down a further $30 are quite high. And when we get down to this level, very similar to that of Netflix, we should see again the holding of support and potentially the bounce continuation if it sets up. However, at the current time, FANG stocks are incredibly under pressure. If I bring up that of Facebook, I can show you this as well. Facebook, again, continuing to the downside, below 170.65. It is down about $5.50 at the moment. I do want to point out one thing. We are coming back down into a very critical trend line. This is from really 2013. And if you connect the higher lows over here, you can see that we're working with limited downside. If I can zoom in, this is the weekly chart, by the way. You can see we're trading at 169. Our target on this is just shy of 165. It may come down as low as about 160, so to speak. But if I go back into the daily, you can see this red line on my screen. That's the extension of that bullish trend line. So again, if you see Facebook crack 164, you're really operating on limited time, or at least limited downside opportunity, because what is most likely going to happen along with Netflix and along with Google is that we are going to see again a collective bid, a reversal, and a move to close a lot of these open windows. It may come as a surprise to a lot of people to see this again continue to strengthen over the coming months, but it is going to set up some really nice risk and reward ratios on the bullish side once we start interacting with these bullish upward trends. So think about that. Again, don't buy into the current sentiment of the FANG stocks. I mean, there are some great shorting opportunities, but don't, I guess, fall in love with them long term. That dynamic is going to shift, and when it does, we're going to shift our perspective and take advantage of that coming bounce. And that's also going to tie in to the broader equity markets. Now, as I speak about the equity markets, I just wanted to point a couple of things out. For a number of months now, we've had this target at 2,852. We got very close to this on Wednesday last week, again on Thursday. But on Friday, we started to see the reversal play out. We had our stop at about 2,815. This was locking in gains from about 2,767. Over the weekend, which has just been, I had a pretty stern word about the setup of the markets and how, I guess, the dynamic is shifting, and the potential for the market to actually sell off this week, if not for a number of weeks, and come back down and sort of test a bunch of critical key areas. Now, the thing is at this time is that the S&P still hasn't closed its gap. It's got very close to it. And as I say this as well, we've got the Dow Jones Industrial Average that is temporarily sort of holding, or at least breaking above this swing high in the month of June. And we spoke about the likelihood of the industrials coming back down as low as about just below 25,000 before we see the bounce continuational type of play up to 26,309. That is if, of course, this support area holds. Now, again, I'm still sticking to that sort of outlook. Today's session on Monday has been relatively bearish. Not the biggest of days, I must admit, to the downside, but we are seeing a little bit of weakness, which again is being led by those FANG stocks too. Down 93 points at the moment On the industrial average, the S&P 500 is down 15 points. We are out of this trade for a pretty handy profit, which is good. You should be focusing on that of this bullish rising trend line over here. And when I go into the NASDAQ as well, you can see that this is the market that's really taken most of the losses, down 104 points. Technology, relatively sort of under significant pressure at the moment. And again, we're looking at this pressure point, okay, on the NASDAQ at about 7,500. We may hit this very easily within the next couple of trading sessions if we get down to this area. Think about what I've just spoken about in terms of Facebook coming back down to its primary bullish trend line. Think about a lot of those tech companies that, again, are coming back down or selling off into those critical rising areas of support, because what is likely to happen is that we are going to see another shift and another bounce as we come on up to close a bunch of those open windows. Now, what has also happened today is that Caterpillar has reported earnings. It was a very strong report to what we've seen over the past number of years, and it gapped up, I believe, 3.5% today. However, have a look at the candlestick that has developed throughout the intraday session. We have that of a bearish candlestick. What we couldn't achieve was the holding of that initial gap up. In fact, at the moment of this recording, we're down 8 cents. So this becomes a relatively straightforward setup. I love these types of setups. If we can crack above the highs of today's session on Monday, this is going to be a no-brainer trade to the upside, and it's most likely not only going to take us up to 154 or 155, we could very easily overshoot this resistance area and rally all the way up to 170.56. On the contrary, if we start breaking below again this important trend line, this is very similar to a lot of these individual companies. You have to understand and jot down where these bullish trend lines are and how they're going to influence price action if in fact we do see a larger sell-off collectively across the markets and individual stocks. But if we do get that sell-off, this is very similar to what Facebook is doing, coming back down and potentially retesting that bullish trend line. This is where the bullish trade is going to set up from about 135. So we've got two entries on the upside. And really the third possibility of this when it comes to Caterpillar is the breaking of this trend line. If this was to happen, this is going to be a huge write-off in market cap. We are going to see Caterpillar more or less move from about 130 when it does crack this level, if it chooses to. And the next area of support is really coming on back down closer to $100 per share. If you have a look over on the left-hand side of my screen, it is rather messy, but this is where we start to see at least a little bit of structure form in terms of resistance during that period in 2017. Something to think about there on Caterpillar. Now, tomorrow, we have some pretty important news. We do have Apple reporting, which is going to be interesting. This is probably going to be the cherry on top when it comes to the FANG stocks and probably, I guess, discovering that of the immediate price action moving forward. But collectively, if you just have a look at a bunch of these stocks, or at least the FANGs, you can see Amazon, a series of multiple sort of engulfing candlesticks and reversal signals, not only over the past sort of 3 sessions, but also we're seeing a bunch of hangman candlesticks and doji candlesticks up and around resistance, which is very, very important to point out to you. I've shown you Facebook as well. Another stock that I can show you is that of Twitter. Twitter was under significant pressure last week. Have a look at this. The bottom is falling out again, down very close to $3. We're not at the close on Monday, but very close to it. And this is, again, another individual tech company at the moment tanking, but coming back down into historical areas of support. So you can say right now that the intelligent thing to do is not to be jumping on the bandwagon. If you're not short Twitter, it's too late now, because there's a very high possibility that we are going to stop at either $30 per share or at most $28. And again, what I want to alert you to is the open windows. What we're going to do is we're going to stabilize, turn, and then we can take the bullish trades back up to close a lot of these gaps as well. Okay. Outside of that, we're seeing almost breakdowns in a couple of other stocks. Baidu is one of those. Pay attention to that moving forward. We've got another reversal on Boeing Airlines. We spoke about this over the weekend, and we've pretty much bidirectionally bracketed this trade. I'm very happy about that, even though we haven't triggered yet. I think it's something that is going to trigger. We've got COP setting up another false breakout over here. You can see the doji candlestick today, or that of a shooting star candlestick or a gravestone doji. We're not in this long at the moment. We're being very sort of cautious on the breakout. You can see my target up here at 73.76. This is a resistance level dating back a number of years, and really the line in the sand, so to speak, for the bulls to take advantage or to really gain control is above 75.27. Otherwise, we're looking at the reversal below 69.64, which hasn't triggered yet. But the candlestick today, although it has been a net positive session, it is that of a bearish candlestick as well, which is interesting. CVX isn't confirming at the moment, sort of balancing or jumping to the upside, but again, relatively weak. It is largely moving sideways. We've got IBM holding ground Funnily enough, a tech company that has been under pressure for quite some time. It's holding up above 144, which is good. But again, if we see weakness continue in the NASDAQ, it is going to flow through to, again, IBM. I've recapped Netflix, and Tesla's the last stock in our list reporting this week. This is scheduled to report on Wednesday. So again, we've got Apple tomorrow and then Tesla on Wednesday. That's going to round us out for our top 12 individual trade list on the left-hand side of my screen. If you're in the market right now, again, it's best to be defensive or remain defensive. It's best to be cautious. Understand that these markets are looking to come back down and to retest those old support areas again. And if I go and show you these oscillating indicators, you can see just how overbought we are and the types of sell signals that we're starting to generate on the industrial average and the S&P 500. Have a look at this. Again, we're getting crosses to the downside, RSI adjusting, MACD turning down. This is on the daily time frame of the S&P 500. And if I go out to the NASDAQ again, pay attention, the fast line on the Stokes has crossed out of overbought setting. We've got the RSI adjusting very, very quickly. It's not oversold yet. And the MACD has firmed up divergence with that higher high in price action. And we're starting to see acceleration of the histogram to the downside. This story remains true. Also, if you go out into larger fractals, this is now the weekly chart of the NASDAQ. You can see that divergence. You can see the RSI collectively selling off. The Stokes is crossing as well. And it doesn't really bode well for immediate positive action for the markets. Again, you have to be thinking that we are going to register at least a little bit of weakness, and we're going to have to monitor what happens at these critical areas of support. But I would not be looking to jump out and buy the market immediately into the close today, or even moving into Tuesday's session as well, especially after some of the prints we're seeing in those FANG companies. Now, if I bring up the Russell 2000 also, you can see that this is looking to me like we're seeing a definitive resistance area at about 1,700. My target again has been 1,740, give or take a couple of points. We obviously haven't hit that yet. But what appears to be happening is that we may be setting up that of a double top, which is interesting. The critical area, again, much like a bunch of individual stocks and a lot of other indices, is that we do have a defined bullish upward trend. And this is the critical area. Again, if you want to do X marks the spot, it is coming here, or coming in at about, say, 1,650, if not slightly lower, which is the old back test of some of this resistance. So again, we're still holding up, I would say, marginally okay, whether it comes to or down to the sort of the exponential moving averages. You can say that, look, we've broken the 50. Yes, that is technically true. However, it's a little bit disingenuous because we have been in a relatively strong period over the past number of months, and these things don't reverse or don't change effectively overnight. It does take a little bit of time, but we are starting to see again chart patterns that are resembling a little bit of weakness. You can see we've got a very strong sloping 100 and 200 exponential moving average. However, this is different, of course, to the sideways moving, simple moving averages on the Dow Jones Industrial Average, and to also a lesser extent that of the S&P 500. So again, we're at the crossroads of the equity market, so to speak, as we come on up and retest a bunch of these old resistance areas, especially true for the S&P and the Dow Jones Industrial Average. And I just wanted to say, make the point that, look, if the industrial average, say the dust settles, and when the dust settles, when we come on back down and we make that higher low probably, or at least we backtest this critical area of support, say we bounce, what we're looking for really is the Dow Jones Industrial Average to be the last market of the three to actually, one, fill the gap up here at 26,435, but then ultimately break above 26,684. If that happens in alignment with the Dow Jones, let me just write this down, the Dow Jones Transportational Average, well then we can expect this bullish trend to continue. But the longer we sort of consolidate sideways and we start to see potentially that of an internal divergence continue to set up and break down, we have to become a little bit more concerned on, I guess, the immediate health of these markets, or at least for the next couple of months as well. So that's going to round us out as at this Monday market recap. If you have any questions, by all means, email me, success@pivotpoint-trading.com. Until next time, everybody, I wish you well, and I will see you in due course. All the best. Goodbye.